people in search of their dream home facing a tough decision right now. Is it time to buy? Should you wait? Sotheby's Realty is joining us live in studio to break it all down.
Well, we've talked so much about home buying and the price of real estate and the markets and the interest rates, and prospective home buyers continue to struggle with the latest rate hike, bringing mortgage rates to more than 7%. And with the potential looming recession approaching, a lot of people are questioning, is it time to buy or wait? So we want to get more answers. Corey Burr joins us now from Sotheby's International to talk about how the trends that we're having here and the prolific effects on both buyers and sellers, and if we're headed to a housing crisis like we did in 2008. So Corey, first of all, I appreciate you coming in today. It's a lot to get through in a short amount of time. Let's start with that. I mean, because a lot of people, the fear of 2008 repeating itself is in a lot of people's minds. Are we headed in that direction? Is that a real legitimate fear?
So we're praying not. We feel like right now the economy is much stronger than in 2008 when major corporations were going bankrupt. We're not seeing that. The economy is still fairly strong. What's happening, though, is the cost of money is going through the roof. Conventional mortgages are now at 7% and jumbo mortgages are at 6%. The cost of carrying a property has increased over 60% year over year. Yet in the face of all of this, we're still seeing the market very strong. 70% of properties in America are selling within the first month. And so that means that there's still transactions to be made.
Sure. As far as the interest rates, that 7% and the 6% for the jumbo, just for perspective purposes, where were we about a year ago?
About half that.
So it's doubled.
Yes.
And that, as we see compounded over time, is a huge amount of money added onto the price of buying that property. In the D.C. area, we have a bit of a bubble typically that we're not impacted as much. The demand always seems to be there. Is it still for homes? Who's benefiting right now, the buyer or the seller?
So in this kind of upheaval, there are going to be a lot of opportunities. And we're blessed to be in this area where there are a lot of high-paying, stable jobs. And those are still very strong. But what's going to happen as time goes on and these interest rates have more and more of an effect, there are going to be more opportunities for buyers to get better buys on properties. So it's very important for sellers to understand that they've got one chance to make their property sell beautifully, and that's in the first 2 weeks of the listing. They've got to price the property reasonably, they've got to be very reasonable in their negotiations, and they need to present their property beautifully. The front landscaping in each room, the floors, the carpeting, etc.
All right, a couple of things to get through real quick. One, are we still seeing cash buys like we saw a year ago when everybody was seemingly grabbing whatever properties they could, which made it tough for people that were trying to finance because obviously the seller would go with the guaranteed cash, right? Are you still seeing that? We
are still seeing some cash buyers if those people have the means, but they're fewer and fewer. So more people are getting mortgages, and there are fewer competitive situations, and there's more negotiation in transactions on the price and also the contingencies, the inspection, the appraisal, and the financing contingency.
It's not like, for those who are looking for a home, it's not like rent is getting any cheaper either. So you're going to pay one way or another. I know that higher interest rates scare a lot of people off when you think about making that commitment. What do you recommend, though, for people who have been waiting maybe for the right time or to have the right amount of down payment to get in? Would you still recommend it? And if so, how much of a difference does it make as to how long you want to stay in that property?
So real estate's very hard to time, unlike maybe the stock market. And it's really the long-term insurer of wealth for families and people. So, and it's also the one investment that the government underwrites, letting us write off up to $750,000 of our mortgage interest and up to $10,000 a year of our property taxes. So they want us to buy properties for strong communities. So I still encourage people to buy properties. Don't delay, because they're just going to be throwing money away for rent.
But if you are going to buy, you should plan to stay there for a while with the high interest rates, right?
Most definitely. You've got to be able to commit to a property for at least 4 years to make the purchase worthwhile so that you can ride out any short-term drop in prices.
One last thing on the big picture, when we're talking about interest rates now pushing or at 7% in some cases, how much higher can the market go before we start to see the next level of warnings?
So every month we all need to pray that the consumer prices drop, because that'll put less pressure on the Federal Reserve to increase the Fed funds rate. But really, we're in a red zone right now, and if rates get much higher, I'm very nervous that the market might freeze up.
All right, but in the meantime, properties are still available.
Yes.
If people are still interested.
Yes.
All right, Corey, thanks for joining us today. I appreciate it. Corey Burr joining us from Sotheby's International. All right, sometimes, Jeanette, you just got to bite the bullet, right? And you can refinance, but as Corey was saying, make sure to do the math to know, again, if it's worth it for however much time you plan on staying in that new home.
Tell me about it.